to hear that in Iowa as well, we are concerned about the SBDCs and the field offices. So I think there's a lot of agreement from this committee that we are concerned about the funding there. So, Administrator, I've been watching the news, as most folks have, about Silicon Valley Bank and Signature Bank. And those regional and community banks are very critical to our small businesses and their lending. When the credit market tightens, we have historically seen higher volume of SBA lending. Signature Bank is one of the largest lenders in the 7A secondary market. And they've now ceased buying new bids on 7A loans. This will make it very difficult for our lenders to continue to have liquidity to make new loans, especially those non-depository institutions like our small business lending companies. So what is the administration doing to oversee Signature Bank and communicate the updates with those lenders?
Mm-hmm. Well, obviously, the quick action by the regulators to ensure that the small businesses and the individual depositors were safe across the banking industry was important, as banks need liquidity to do lending across the board. Obviously, we're tracking closely all of the financial institutions that either hold our loans or that participate in our securities, whether that's on our small business investment companies or within our guarantee program. The administration continues to take strong action to ensure that the banking industry continues to be supported and resilient during this time, as signaled by the Secretary of the Treasury as well as the regulators. And so, as the SBA's view is that this is just demonstrates further why we need to address the capital gaps and fix our programs to better reach and support banks who have liquidity issues right now, and a guarantee would be perfect for their bottom line. Right now, 4,000 of the 4,500 community banks, for example, who serve so many communities across the nation, haven't done an SBA loan in the last 2 years. And so we need to get them back in, simplify the program, and make sure that they can use their prudent credit underwriting standards in order to deliver these loans.
Mm-hmm. And this would be a prime example why strong underwriting is really important as well. I hope that this has been a one-off situation, but I think it's encouraging many of those institutions to go back and relook what their practices are. So, again, I hope it's a one-off. Administrator, recently, Chairman Cardin and I sent you a letter detailing our concerns about two of your recent proposed rules regarding affiliation and the SBLC moratorium that could open SBA lending programs to fraud, predatory lending practices, and other vulnerabilities. These rules are without congressional input or authorization, and in spite of recent fraud levels witnessed in COVID relief programs. So when should we expect those final rules?
Those are still currently in process. We're accounting for all the public comments that we received over the 60-day period of time. And what I would share with you is that obviously we're taking into account all the recommendations that we've received, not only through public comment but by continuous feedback from this committee, as well as the advocates out there who are supporting as well as opposing. So we are still in process. It's beyond the regulation. We want to make sure that all processes are in place and our operating procedures so that we could be ready to support our lenders. This is about expanding access to capital with prudent, demonstrated programs such as the SBLC that has already done over $14 billion over the decades that it's been in action, as well as, of course, the SBA Express that uses the credit underwriting standards that we are moving towards within this new reg change. And they've been successful. The 20 of the last 23 years, SBA Express term loans have outperformed against the 7A term loans. So we are confident that that credit underwriting standard that we are putting forward has data to support it. And so these are administrative regulatory changes that we think will streamline for our banking partners, especially getting those community banks banks in, as well as allowing us to expand our distribution networks.
Okay, and I know we did receive your response. I do want to thank you as well for the letter that was sent back to Chairman Cardin and I. You do continue to state that PPP is the basis for removing most of the affiliation test, and I just need to restate that Congress did not authorize a permanent change to larger 7A loans for affiliation or underwriting criteria because of COVID programs. Further, this is yet one more example of this administration not letting an emergency go to waste and instead using the COVID crisis as justification for more of that government spending and overreach. And I'll come back to this if we get a second round of questions here, because I do have a little bit more that I'd love to discuss on this issue, and I'll yield. Thank you.
Senator Rosen.
Well, thank you, Chairman Cardin, Ranking Member Ernst, for holding this hearing, and thank you